Welcome to the Big Money Show. I'm Brian Brenberg, along with Bahnsen Group founder and managing partner David Bahnsen. Welcome, sir.
Thank you.
Top trade officials say President Trump has found the sweet spot on trade deals. South Korea joins Japan and the EU with 15% tariffs on their exports, down from the 25% rate Trump had floated. For other countries that haven't cut a deal, the clock is ticking. The deadline is less than 12 hours away, and the president says it's not moving. David Bahnsen, has the president found a sweet spot on these deals?
Here's the issue. Those celebrating everything without knowing all the details are taking a big risk, and those sitting there criticizing it without knowing everything are taking a big risk. There are certain things that are really good. There are certain things that are totally ambiguous. That's just the honest balls and strikes of this. I don't like this idea about, I love foreign direct investment, and that's what Scott Bahnsen said he wanted, is more foreign capital coming in. The Navarro priorities went down. The Bahnsen priorities came up, and I love it, and I celebrate it. But the idea that we want the president directing private investment is something I always thought conservatives were against.
Yeah, I don't quite know what that means, I have to say. So that's one where I'm kind of
means that he's going to direct this.
Well, we'll see. We didn't get details on that.
It actually meant very different with Japan. They told us the president's in charge of $550 billion, and it turns out it's nothing like that. So there's a big disconnect between the hyperbole and the reality.
We shall see. Okay, so South Korea is down to 15%, joins Japan, joins the EU. You're looking at that chart. You're looking at where we land and where markets are kind of going in all of this. What do you make of it?
Well, the reason I brought it is because now the threat is if you don't make a deal by the deadline, we are going back to this onerous sheet of very high rates and tariffs on most countries. And so I think the president is making his final push to say you need to come to the negotiating table or you're going to get this. And nobody liked this.
One of the things that they seem to have done well is they got everyone talking like, oh, these countries are going to have to pay. It's going to go back to these old deals. Those high rates were not just bad for those countries.
Right.
They were very bad for us.
Right.
Some of us actually do buy chocolate and coffee and things, and for no reason were those tariffs going to be going higher. They don't charge us higher tariffs in Switzerland, so they changed the narrative in a way that proves to be advantageous.
I actually agree with that. This became,
this
can I
sheet
borrow it?
has become the prop
became
today.
really important leverage for the president, and he's used it for his leverage.
We don't know where the big, beautiful budget kicks in on pro-growth, Laffer curve stimulus, and where the tariffs kick in on,
Right, that balance.
You know,
That's
that is,
what I'm
think about
talking
what would,
I mean,
someone's got to ask Arthur Laffer, maybe you should because you're running those
Maybe
circles.
I have.
Okay, what does he think of tariffs? It's anti-Laffer curve.
Well, I won't speak for Art, even though I really want to. But I'll speak for myself because I'm a supply-sider to the core, and Art is a mentor of mine. I will say this. That tension is the fundamental issue here, and it's not going to be known in one quarter.
Right.
And so the left celebrating bad things and the administration celebrating good things week at a time, quarter at a time is silly. And a year from now, if total trade has declined, that's a bad thing. If capital flows into the country have declined, that's a bad thing.
If GDP doesn't remain at 3%.
Well, it isn't at 3%. It's
I thought
at
it just
1.25. 3 yesterday, 0.521. It blends to 1.
And by the way, there was a lot of...
All of it was from trade.
In that 3%, there was a lot of wiggle and weird.
Well, it was almost 5% impact from the front running of imports.
For investors, you can't wait 6 months, 1 year, a year and a half, 2 years. You've got to make investment decisions right now. So, David, what do?
You don't make your investment decision around Washington, D.C.
Yeah.
That's never the primary driver of markets. You were talking about, I think we're up 14 since Liberation Day. S&P is only up 8 on the year. It was down 8 before Liberation Day. The Dow's only up 4 on the year. Part of the issue with investors is maybe all these policies go really well, but the market's already trading at 23 times earnings.
Right.
So I don't think this is just about public stock investors. It's the bond market. It's small business. That's the biggest issue I deal with dealing with clients. My firm manages over $8 billion, and people are not primarily asking me what's happening with the S&P. They're saying my business doesn't know if we should go forward with certain orders
small
and hiring.
Businesses, just so you know, if you look at any survey of small businesses, they hate this stuff.
Hate it.
The Supreme Court is going to have to rule on this. The Roberts might have to come to Trump's rescue on all these tariffs, because he does not have because the question is whether he has unilateral emergency powers to enact tariffs.
But by then it might be a moot point, because if you come to trade deals with countries, then it's no longer about the IEEPA or anything.
You sure about that?
You've got deals.
If he's repealed.
Well, but if the trade deal presumably repeals whatever.
That's not totally true, Brian, because some of the stuff they're using emergency powers, but these mutually agree upon deals are not being legislated by Congress, and the power to tax is still exclusively held by Congress.
And Brian, there's a damages issue too. That's what they're suing. They're suing
for
small
businesses.
Yeah. He's brought up Mexico and Canada. Remember, most of those tariffs outside of USMCA, he's appealing to national security, the 232 deals on steel and aluminum. This issue on emergency economic powers was on the trade deficit. The administration's already said if they lose in court with one, they're just going to move to one of the other rationales. I think you're right that they're going to try to get the deals in place before the courts rule against it.
Now, still, there's going to be a reckoning a year from now. Where is the economy going to be at? We're going to be the run up to the midterms. The Trump presidency is riding on this. Now, I hope he wins. I'm just telling you, it is not a given.
I think you and Brian are both right. The panic didn't play out. But the reason it didn't play out is because President Trump reversed course.
Yes.
And had he gone forward, that was a bottomless market at that point. 5,000 points in 4 days. We reversed 3,400 points in 1 day on April 7th, and the president reversed. That's what got rid of the
And the bond market told him, you better cut it out. Microsoft is now the world's second $4 trillion company.
They've actually dropped below it now. Microsoft's given up a bunch of its gain today.
Easy come.
They're already 3.999 trillion
now.
Sorry, so close.
There's an internal split at the Federal Reserve, and it's making history. Two Fed officials, Christopher Waller and Michelle Bowman, they broke ranks. They voted to cut rates yesterday. It's the first double dissent favoring rate cuts since 1993. So we don't quite have a united front here, David, but Hassett makes a valid point, which is if you're looking at the data, and that's inflation and labor, there is a case to cut rates. They didn't do it yesterday. September may be on the table, but Powell said we haven't made a decision just yet. So he's really he's holding it close.
I believe he will cut in September. I believe they should have already cut by now, and I don't agree with all the reasons that are being said. And the conversation gets difficult when people start saying we should be at a 1% Fed funds rate. Oh, and it's the greatest economy we've ever had. 1% is what you have in a hyper recession. So I believe that they're too tight, that it is hurting mortgage rates, that there's lagging issues that are going to end up hurting the economy if they don't get in front of it.
Wait a minute. The last time you were here, you said that the Fed had no control over mortgage rates. And now you're saying it's important?
Yeah, no. What I said before was that the Fed can't control mortgage rates. So what Powell said yesterday was actually one of his few good answers. The Fed obviously doesn't control mortgage rates. The Fed controls an overnight lending rate, but that serves as a reference rate to other borrowing. So there's a really important thing for people to understand. The 10-year and the 30-year are much more important for mortgage rates.
If you lower rates now, if the economy is expanding, you lower rates, don't you necessarily gap out the 10 and the 30? I mean, in the past, that's what happened. When last time Powell cut in the middle of expansion, this was during the campaign. You remember it was around September.
December.
December.
And then he cut twice after the election.
And it's still it capped out the 10. And I mean, if you're worried about the 10 and 30, we had spikes on the yield. Unless Donald Trump and Bahnsen think that his tariffs are going to start dragging the economy down, and that's why they're freaking out. Unless they think, well, you know what? We have to keep rolling over short-term debt, and we need to save money, so we need this lower. And
well, they're saying that that's their new strategy.
Well, then maybe that's the reason, and it's not economic.
Well, it may not be economic, but the reality in financial markets is they have $1 trillion of commercial real estate debt that rolls over. They have $1 trillion of floating rate small business debt that rolls over. So they're trying to get in front of it. And they have to talk about all the normal rules-based indicators, but it isn't true. My view on the 10-year is it not only should be, but will be what nominal GDP ends up being over 10 years. So if you believe inflation will be about 2 and real growth will be about 2, then you ought to have a 10-year about 4. Right now, we're closer to 4.4. So there's room for that to come down. You don't want the 10-year dropping to 2.5%. That is assuming that we're going to get no growth for 10 years. So that's where I think a lot of people need to be careful what they're wishing for.
So what it sounds like you're saying to me is that it's a very, very delicate balance. It's almost like doing a little bit of a dance.
So
but
what does Powell think? What does Powell think?
Powell has room on that argument. A little room. I'm not saying he needs to cut 300 basis points.
Oh, right.
Right?
He should not be cutting 300 basis points.
Well, I just want to know, what is Powell's rationale? I mean, I know I'm not a big fan of his, but He's not a complete imbecile. What is
saying
this?
tariffs cause inflation.
Charlie,
What is
right?
his? What is his rationale?
Can I give you? I'll give you three. I'll give you three.
I want the.
I'll go
Okay,
answer. I'll let Jerry remember my answer.
Inflation, jobs,
No.
and under the hood GDP report.
That's not his real rationale.
Very good reason.
Okay, what's his
The
rationale?
real rationale is that he believes the same thing the two dissenters believe and the same thing we're talking about on set, but he doesn't believe he should appear on the global stage as giving in to the president, so he's going to give the president what he wants 1 month later. That's what's really happening.
So,
everyone is saying, by the way, that there's the first time we've had
That's
dissent.
silly.
You know, Chairman Powell dissented against Bernanke on QE3.
I remember that.
And we've had two dissenters before about rate hikes, but this was different because it's rate cuts.
1993.
Well,
Alan Greenspan.
Where you had two
No,
governors.
that was two dissenters on cuts in
Right.
93. But in 2013, Powell dissented on doing QE3. So we've had dissent before, including with this chairman on the other side of it.
Yeah.
But I think that he is dealing with the reality of he feels that there's an institutional credibility. I disagree with him, but I don't have any doubt that he genuinely believes if he looks like he's giving in to a president who's jawboning him, it would be bad.
I think that's right. And I'll just
By the way,
add to
that's-
it and
that's scary
say,
to play
but
with
he
that,
has
don't you?
dug himself into this
I
position.
agree. I
And
agree.
he's played politics before for the other side, but hasn't been scared to have it look or appear that way. He could give that quarter point. He could give another quarter point a little bit later. And then if all of a sudden his inflation and tariff theory, the inflation happens to pop because of tariffs for some reason, he can dial it back.
But
It
you know
doesn't
what else
all
he
have
could've-
to be static.
But Jackie, the other thing he could have done yesterday is what I thought he was going to do, is not even give the quarter point cut and just basically tell the camera he was giving it next
do
time.
it next time,
They've been
right.
doing forward guidance since Greenspan, and President Trump would have been totally content with that, but he had to just get the little dig
By the
in
way,
about
he
we don't
is-
know what we're doing.
Well, he's
Can't
got-
help
he's got-
himself.
Here is what Mamdani said on Twitter, not recently, some time ago, but it's being brought up today, that the NYPD was racist, anti-queer, and a threat to public safety. David Bahnsen, what do you make of the situation?
Well, there's two different categories of disaster, and really there's three categories if you add the anti-Semitism, but then the anti-police and then the economic aspect. Two of those things are liabilities for him with voters, the anti-Semitism and the anti-police thing. The crime and all this stuff, the shooting this week, that's not good for these tweets to be coming out. The problem is, from a policy standpoint, where he's most dangerous and can do the most damage as mayor, there's a whole bunch of people that want to vote with it, with price controls, wage controls, rent controls, but basic 1970s socialist economic policy. That's the area where I'd be most concerned about with him actually being mayor.
He's talking about taking over grocery stores, right? Wasn't that his big thing? What did Kamala Harris say during the campaign?
Price fixing.
Almost the same.
She lost, though.
She did lose.
Right.
By how much?
Well, but here's the thing. President Trump picked up 10% from where he was in New York before. The two issues.
Yeah, no, but
so, Charlie, I specialize in dysfunctional states and living in them.
right.
Okay, as a lifetime
choice.
Californian who came to New York to
Believe in
lower
California.
taxes, the fact of the matter is that New York has always been more pragmatic than Californians have
Well,
about crime.
you don't know
what brought Giuliani in after Dinkins and what kept Bloomberg in for 3 terms. There's a certain pragmatism, and what changed. Eric Adams could not run as the far left guy to replace De Blasio. He had to run as a tough on crime guy. He had to run
Because
as a
people
tough-
are getting thrown in front of subways. But my point
That's
is,
right, and
my
people
point
didn't
is
like it. That mattered. It mattered.
for every Eric Adams, there are 40 Zoran Mondamis or people close to him in state and city government right now. We are well beyond.
Okay,
we're
Charlie,
well beyond.
can I ask you a question?
No, let me
If
just
there
make
was
this
one
point.
opponent
We are well beyond the Giuliani and the Bloomberg
Yeah,
years. This is where we're in never land with the political
I
class of the
disagree.
city.
If there was one opponent, I
If there was
think
one
the
opponent, Mamdani would lose.
Right. I think the
If
opponent
there was one
would
opponent,
win.
it wouldn't matter which one it was.
What
I
free
just-
market? Wait a second. What free? Take Curtis Lee out because I know what he stands for. What free market stuff does?
I didn't say that.
No. What? How?
That's not that. We're
That's
not
my
debating
argument.
that.
That's my argument.
No. How?
I guess, David, I come to you in this. You may not know the answer to it. Why does the government have to be involved in it? Other than maybe there's some like coordinating function there. But that's what I want to understand. Because if I make a private choice about private entities and say I want to use my data in this way, you should be able to make that choice. But when the government gets involved, then my mind just always ends up going to like Facebook, Twitter censorship kind of stuff, and I want to avoid all of that.
Well, which is where everyone on the right's mind would have gone a few years ago with this. I basically agree 1,000% with the points Jerry made and Jackie made about the benefits of it. The issue is when they say, well, it has to be secure, everything is secure until it isn't, until there's a break, until there's a problem, until there's a breach of security. That's baked in. Secure things get breached. It's not to me even the CMS and government's involvement, but it's Google, Apple, Microsoft. We're supposed to believe there'll be a perfect wall between the medical and the commercial side. I think they will intend for that, and I think they'll try, but I think there will be letdowns. Ultimately, I still think that the benefits will outweigh the risks, but people should be very careful of a government administering something where, candidly, they don't have a great record of anything technological. Does anyone remember the Obamacare website launch?
Took a while.
I just think that this would be better done in the hands of private actors with people freely giving the data. But the idea of record sharing and record keeping can save lives, of course.
Charlie.
The government is supposed to do a few things.
But
even as a conservative, libertarian.
Charlie, the
10 seconds, fellas. Finish her up right now.
Big tech's a part of this, and the rural people that need to benefit from it, they have to opt in.
Right.
Are they going to opt in?
Well, if they don't, that's their problem.
Okay.
We will leave it there.
Warmly put.
Yeah.
David Bahnsen, so fun to have you. Thanks for being here.
Thanks for having me.
We appreciate it.